This time is different. It's a saying that investors don't love to hear because of how many times it's led investors astray. But we can actually see that Bitcoin has been performing differently than it has in the past. And nothing sums this up better than this chart that I just found. And let's take a look at it and discuss it and see if we feel like it's possible that the 4-year cycle in Bitcoin's price action is done and maybe this time is different and why it could be. My name is Forrest Hodel. I'm a Bitcoin educator. And if you want to book a one-on-one to cover any Bitcoin basics, security best practices, and any sort of needs around Bitcoin, you can do so through the link in the description. Okay, so this is the chart here. This was posted by Brad Mills, and we're going to walk through and show everything here. What we can see happen here is that in the past, from 2011 to 2014, we can see that there was a bull market up, and the percentage is just insane. And the information around here of what has happened is innovators, Bitcoin is money, peer-to-peer cash, Silk Road, cypherpunks and libertarians, Mt. Gox, and minimal retail. So this is all what's happened in that time frame. Then the bear market is a sort of sideways and down for just basically a year and a while. And then we have another bull market happen with early adopters. Bitcoin is digital gold, corporations versus users, fork war, and UASF, front run Wall Street, retail and trader dominated. So this is from basically 2016 to 2018, sideways and down from 2018 to 2020. Now what we have here is from early 2020 to looks like 2022, we have another bull market, and we can see it here. Early majority Bitcoin versus crypto. Institutions are coming. HNWIS funds and retail mixing. So this is also when strategy got into the game here and started to acquire, but they weren't doing necessarily a leveraged Bitcoin equity play. There wasn't a lot of other Wall Street investments. There was futures. There wasn't a lot of buying here. And then we had the bear market here of 2022 and up to 2023. Now what we have here is this period from 2023 to 2025, which we've been in here. And we can see there hasn't been this parabolic. You can see these sort of like these rises that are really pronounced. What we can see here is this sort of stair stepping up, sideways and down, and then stair step up again. So we can see a little bit of additional information here for this thesis to play out. Chasm crossed US ETF right here. And then right here is the red wave as well, which is just favorable jurisdiction for Bitcoin in the US. And this is called the SaylorCycle. Late majority, cycles are dead, 10 plus year Bitcoin gold rush. Bitcoin is digital capital, corporate Bitcoin treasuries, strategic Bitcoin reserves, BTC equals global reserve asset. And because this is a log chart, you can actually see that this is going up a lot. And these blue lines are forecasts, right? The stair stepping is the thesis here. We're going to see a giant stair up and then sideways and up and then a downward step. So this upwards momentum here is 127% gain up to 237,000. We can see this downward one here is a 50% downward movement from roughly, let's see, maybe 850 or 900 down to 500, or I guess that must be a million down to 500. So 50% loss there, and then sideways and up as well, stair stepping. And this SaylorCycle is going to be a 23,000% rise in looks like 2032. This projection has it for $3 million. Brad Mills here says Bitcoin cycles are dead. The days of parabolic Bitcoin booms and devastating crashes are done. Bitcoin is inevitable, and we are at the beginning of the Saylor cycle. Are you positioned for the next 100x in Bitcoin? The chasm is crossed. We got British Hodl agreeing. We have a lot of people thinking that this is possible, that this is likely. Yeah, so let's take a look at some of the things that have to play out here. So late majority. So essentially this is saying that the early minority is in already, early adopters, early majority. So the majority of the early holders are in here. The late majority is coming in at this point during this Saylor cycle. The cycles are dead. So again, that means that there's not going to have this 80% drawdown like it does here, or 85% drawdown here, or 88% drawdown here. So that 50% drawdown breaks the cycle, and it's supposed to happen. Well, it could happen roughly any time now, up into like from a year from now. So if it doesn't, then technically the 4-year cycle is over and we are reaching some sort of other cycle, whether it's this Saylor cycle thesis or not. The other thing here, 10+ year Bitcoin gold rush, not really a point, except that the gold rush signifies that everybody is trying to acquire as much as possible. So, and that's going to happen for 10 years until it's distributed to all of the holders that are switching from a different type of wealth, a fiat denominated wealth, to a Bitcoin denominated wealth. Bitcoin is digital capital. Again, this is just a redefinition of Bitcoin from, Bitcoin as gold, digital gold, Bitcoin as money. This is digital capital. So what this means is this can be borrowed against, lent against, this can be used as property, it can be used as money, it can be used as investment. All of that sort of goes into the idea of capital. Corporate Bitcoin treasuries, we've seen this begin to play out. And I think that what we have now is we have Saylor, we have Strategy buying huge amounts of Bitcoin. We have copycats all around the world that make sense in certain jurisdictions to have outsized returns and competitive advantages. And I think what we haven't really seen yet is very profitable businesses just start moving their cash, their free cash flow, into Bitcoin. I think when we see that, I think that is a very big reason for a thesis like this to play out. I think if that happens, if all the capital begins to, or a large percentage of treasuries start allocating to Bitcoin and as opposed to treasuries or cash, I think that we see a break in the cycle, because that is just outsized demand in size and doesn't really care that much about the other affecting properties of a 4-year cycle. The majority of the 4-year cycle is driven by supply and demand, by halving events, and by global liquidity, and potentially even the election cycle as well. Strategic Bitcoin reserves, again, this is something we haven't actually seen yet. The strategic Bitcoin reserve of the US is not transparent whatsoever. They say they can add Bitcoin into it. Bo Hines talks about buying as much Bitcoin as possible. They're very bullish about Bitcoin in their speech, but we have no proof of them actually buying any Bitcoin. We don't know how much Bitcoin they hold. And of course, them holding it and not selling it, which is part of the executive order mandate, is a bullish idea, but again, we haven't actually seen them acquiring any. So yes, we don't see the sell pressure from them selling it into the market, but we also see no buy pressure yet. Will we see buy pressure? I think a lot of people think so, and of course this is one of the reasons here. And the last one here, BTC equals global reserve asset. So I think that encompasses a lot of those earlier things. I think if corporate Bitcoin treasuries happen on scale, which they already are happening at a certain type of scale, strategic Bitcoin reserves, if those continue to happen and actually really do happen, then that is part of a global reserve asset. And we will just see if banks start allocating to Bitcoin, right? If this thesis plays out in any respect to any scaled degree of this, it makes sense to hold this over holding what typically is held in treasuries, which is treasury bonds or corporate debt, right? Debt instruments. And a lot of these actually perform incredibly terribly. If you look at TLT, for instance, which is a basket of 20-year bonds, treasury bonds, bought at different intervals, they give you around 3% annually in payments, and it's down 40% over the last few years. And a lot of people are holding that trade because they believe that there's a mean reversion trade that happens with treasuries. And they think that basically interest rates go down on, the Fed funds rate and overnight lending and all of this. And that's going to drive the price and value of these bonds up again because yield becomes more scarce, guaranteed yield. And that drives the price up. So there's the inverse happens. And I think that's going to be one of the worst trades of our lifetime, is the mean reversion bond trade. I don't think it's going to play out as people believe it is, because we can see that there is something new happening here, and it's called Bitcoin, and it's going to outperform all of that while actually having a lot more safety than the major default risk or inflation risk that happens with bonds, right? We saw Silicon Valley Bank blow up because they bought too long of duration and they didn't account for inflation risk and interest rate hike risk, which blew up their positions. And it would be fine if they held them to maturity, but then they, any sort of inkling of low liquidity for deposits, created a run on the bank. And of course, these are just terrible instruments to hold for any duration, but especially for long-term duration. And you're much safer holding something like Bitcoin for a long duration, right? In the short term, it might make sense to hold short-dated bonds. Those are less risk than holding Bitcoin for a short term, because the risk of Bitcoin is only holding it short term because there's volatility risk, right? This thing is not priced accurately, or it is priced accurately, but there are a lot of people in the market that have differing opinions of what this thing is worth. With a short-term treasury bond, it is worth very close to its principal of what it pays back when that debt instrument becomes due, right? The coupon, plus the interest rate. There's a reason to hold it for that interest rate. So in the short term, much safer to hold something much less volatile, like a short-term treasury bond. In the long term, much safer holding something like Bitcoin, which has historically outperformed any other asset in the world. And if you hold it for any 4-year period ever, you are in a positive position on your purchase, which is really, really hard to wrap your mind around if you come from TradFi, that Bitcoin is the safest asset for a long-term hold. That's why my name's Forrest Hodel. You hold it for a long time. You hold on. So I do think that this is an interesting thesis. I could see potentially this playing out, that we just see more stair stepping. We don't see necessarily a parabolic rise. And a lot of this is because of something that I thought about for a while. I saw that there was a lack of volatility, especially downside pressure volatility, but I think it was really knocked into my consciousness and really brought to the forefront when I had a conversation on this channel with Michael Sullivan, who talked about how the buyers are different this time. The institutions, the corporate treasuries, the ETFs, the OTC desks that need to source Bitcoin, they're doing it algorithmically, and they are taking out the volatility to the downside, because as the price goes lower, they start accumulating it in sort of a algorithmic way, and that's going to lower the volatility and not make the downside so large. And then they're going to sell that peer-to-peer to their if it's an OTC desk we're talking about, they're going to sell that, and there's not really going to be a price change because of that, because the price has already been reflected in when they were buying it. It's just a simple trade that doesn't happen on the market, so it's not reflected on the market. And then the same thing happens with these treasury companies, is right. If they're buying it directly, not going through, and BlackRock buying it directly, they're doing it over time and affecting the market as little as possible while doing so. And that's why we haven't seen these massive parabolic rises, is because those were driven by buyers that treated the market much differently. When the price ran up, they bought more of it, and there was sort of this reflexive flywheel that created a momentary bubble within the market that had to course correct and come down to a level where it went back to the people that were actually long-term holders, right? That's going to be what's happened. And I think that's going to happen still, but to maybe a lesser extent, because the buyers and the sellers are different this time, right? So as much as I am not convinced that we won't see another bear market, I am convinced at this point that the bear market will look different and potentially happen in a different time frame. And that's really what this is saying as well, right? This is saying that it's going to take a couple more years of stair stepping, and then there's going to be a 50% retracement from 1 million to 5 million. And that is essentially the bear market, but it's broken the cycle. And that's going to be devastating, and people are going to think it's crazy and they've lost so much money, and people are going to be really upset. But that's because they're buying at the highs and they're selling at the lows, and they're getting tricked, and they are getting they are not realizing even still what they hold and that it will recover. And of course it will recover because it is the first finite asset in the world, and it is the new monetary network and asset that we will use as digital capital and the base layer of money from now into the future. And we can get on this cycle early. We can get on this network early. We don't have to sort of wait for this to happen and become the new monetary network. We can just adopt it as a side monetary network, still exist and earn our fiat wages and whatnot, and just move that into Bitcoin and join the new network of the future that increasingly lowers the cost of everything in the world around us. You know, one of the things I hear the most from normies is how expensive groceries is getting, how expensive the world is getting. Everything gets cheaper if you are on a Bitcoin standard. You do not have to wait for the world to catch up to you. You can do it now, right? And if you want to do it now, you can check out the link in the description for Bitcoin Well. If you sign up using my link, you'll actually get some free Bitcoin, free entrance to the network, right? And they're a non-custodial exchange, which means when you send them fiat, they send you Bitcoin directly. It's a really good way to protect yourself from things like FTX or Coinbase and, you know, Mt. Gox, right? All these things that I even mentioned here. And also, yeah, just again, if you want to book a one-on-one with me, you can do so in the link in the description. There's a coupon code for the Stampseed kit down there to preserve your seed phrase. There's a coupon code for the servers from Start9, and there's an affiliate link for the Jade hardware wallets. These are all things I use, all things I recommend. And thanks again, everyone, for watching Bitcoin Not Crypto. My name's Forrest Hodel, and we'll see you on the next one.